How the US, Israel, Iran war is affecting mortgage rates. Mortgage rates were finally falling below 6%. Then suddenly, they started rising again. And the reason has nothing to do with the housing market. The US, Israel, and Iran war is now affecting something as ordinary as the interest rate on your home loan. A conflict thousands of miles away. Tension in one of the world's most important energy regions can ripple across the global economy and quietly change what Americans pay for a home. So how can a war in the Middle East end up raising mortgage rates in the United States? And the answer is a very simple chain reaction most people never see. It starts with oil. Iran attacking oil sites. Iran has been launching drones and missiles at oil plants and oil ships in nearby countries like Saudi Arabia, Bahrain, and Oman. These are places where oil is turned into fuel and loaded onto massive tanker ships that supply countries around the world. When those places are attacked, companies worry less oil will reach global markets. When supply of oil drops but demand of oil stays the same, people compete for the smaller amount of oil, so prices rise. Higher oil prices mean fuel becomes more expensive. Fuel powers trucks that transport goods, machines in factories, and equipment farmers use to produce food. So when oil prices rise, businesses suddenly face higher costs everywhere. Trucking companies pay more for diesel to move food and products across the country. Factories also pay more for fuel to power machines that build cars, electronics, and clothing. Farmers pay more for fuel to run tractors, harvest crops, and transport food. When businesses face higher costs, they pass them to customers by raising prices on groceries, clothes, and everyday goods. When prices of everything rise across the economy like this, that's called inflation. And when inflation rises, mortgage rates usually rise too. I'll explain how in a moment. And there's another place this war could push mortgage rates higher: Strait of Hormuz risk. The Strait of Hormuz is a narrow sea passage between Iran and Oman where huge oil tankers travel every day. About 1 out of every 5 barrels of oil in the world passes through this route. Because of the conflict, some oil tankers are avoiding the route, and oil shipments are slowing down. When fewer tankers move through this passage, less oil reaches global markets. Less oil supply pushes oil prices higher. Higher oil prices raise inflation, meaning everyday goods like food, clothes, and transport get more expensive, which can push mortgage rates higher. But there's something even more important that could keep mortgage rates higher for longer, something Qatar's energy minister recently warned about. Qatar Warning. The energy minister of Qatar warned that even if the war ends in a few weeks, disruptions to the global oil supply could last for months. For example, damaged facilities, delayed shipments, and fewer tankers moving through the region can keep oil flowing to the world more slowly. That means the global oil supply could stay lower for weeks or even months. When the supply of oil falls but demand stays the same, oil prices rise. Basic economics. If oil prices stay high, inflation stays high, mortgage rates stay high. And the length of the war itself could make this worse. Donald Trump has also talked about the possibility of regime change in Iran, which could turn this into a longer conflict lasting months. If the war drags on that long, mortgage rates in the US could stay higher for months instead of falling soon. How inflation raises mortgage rates. Here's the key part, and this is where your mortgage payment gets affected. When inflation rises, prices of everyday goods across the country start climbing. Imagine diesel jumping from $3 to $4 per gallon. Suddenly, every truck delivering food across the country costs much more to run because fuel is more expensive. So grocery stores pay more to get food delivered, and they raise prices on milk, bread, and vegetables to cover those higher delivery costs. Factories face the same problem. Fuel and transport become more expensive, materials cost more to ship to factories, and products cost more to deliver to stores. So factories raise prices on cars, appliances, and electronics to cover those costs. And if materials like steel and lumber rise, building a house can cost tens of thousands of dollars more. That's inflation spreading through the entire economy. When inflation rises like this, the Federal Reserve, the US central bank, usually keeps interest rates higher to slow down rising prices for things people buy every day. Mortgage lenders know this, so they expect borrowing money to stay expensive. To give you a home loan, lenders first have to get the money themselves. They borrow huge amounts of money from banks, investors, and financial markets, and then lend that money to homebuyers as mortgages. When interest rates across the economy stay high, it costs lenders more to borrow that money in the first place. So to cover those higher borrowing costs, lenders raise mortgage rates on new home loans for homebuyers. For example, if mortgage rates rise from 5.9% to 6.3%, that small change can add about $100 per month to a typical mortgage payment. And that's why when inflation rises across the economy, mortgage rates usually rise too. The solution to the mortgage rate crisis. Even if war pushes mortgage rates higher, buyers still have practical options. First, you can buy a home now and refinance the mortgage later. For example, you might buy a home with a 6.3% mortgage rate today, then refinance the loan later if rates fall closer to 5%. Second, you can put more money into your down payment, so you borrow less money from the bank and lower your monthly mortgage payment. Third, you can buy a slightly cheaper home, for example, $350,000 instead of $400,000, so the higher mortgage rate doesn't make the monthly payment too expensive. Fourth, you can lock in a fixed mortgage rate for 15 or 30 years so the bank cannot raise your mortgage rate later if rates increase further. Fifth, you can wait to buy a home if mortgage rates make buying too expensive right now. And that's how a war thousands of miles away can quietly raise mortgage rates on homes in America, even for people living far from the conflict. Subscribe if you learned something and want more simple explanations of how money and the economy actually work.